Hi, welcome to Curious Bricks. In our last video, we talked about MasterCard. Today we're going to talk about its biggest competitor, Visa, ticker symbol V, Q4 2020 earnings report. V is part of S&P 500 index under the information technology sector. The company's earnings call was also hosted on October 28, 2020. Since this is our first time covering Visa, we will start with a quick overview of what Visa does and how they make money. Visa is one of the leading payment network companies globally. The company was founded in 1958 by Bank of America. It is the second largest payment processing network globally after China's UnionPay. Visa reported total revenue of roughly $22 billion in fiscal year 2020. The core markets they serve include credit, debit, prepaid, and global ATM. Its revenue is split into four groups, which is quite similar to MasterCard's. The service revenues collect fees on the services provided in support of client usage of Visa payment transactions. This group accounts for 1/3 of total revenue. Data processing revenues make money from transactions switched for non-Visa branded products. International transactions revenues charge fees on cross-border transactions. Lastly, the other revenues group is made up on various services Visa offers to its customers. Visa also pays out a large amount of incentives, roughly 25% of the gross revenue, to its partner issuers to promote the payment volume and acceptance of Visa products. When it comes to competitors, you will find these familiar names such as MasterCard, American Express, and others. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 11, 2020, Visa share price was $206, and its market cap stands at $454 billion. The trailing price earning ratio is around 42.2. Forward dividend is $1.28 per share, or 0.62% yield. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q4 2020, Visa reported a 17% year-over-year decline on its net revenue. Full year 2020, net revenue is down 5%, primarily driven by its international transaction revenues. Similar to MasterCard, Visa also reported strong growth on its other revenues. In fiscal year 2020, Visa reduced its G&A expenses to mitigate the revenue impact related to the pandemic. For the year, Visa reported total operating income of $14 billion, or 6% reduction from a year ago. Visa also published some relevant statistics in their filings. As you can see, Visa has a relatively bigger share of revenue generated from the US market than MasterCard. For the full year, we see growth on its debit business, but credit remains weak. Cash volume from international also decreased by 9%. Now moving to the balance sheet, Visa increased its cash on hand by $8.5 billion to a total of $16.3 billion, while long-term debt also increased by $4.3 billion to $21 billion. Among the long-term debt, $3 billion senior notes will mature in December 2020. In this quarter, the management made a comment on the recovery trend. Visa is seeing V-shaped recovery for domestic volumes and L-shaped for cross-border volumes. Within the US market, the recovery trend differs among the three key spend categories. Food, drugstore, home improvement, and retail goods are tracking pretty well, almost back to pre-COVID growth rate of high teens. Automotive, retail services, department, and apparel stores had steady recovery since April, back to pre-COVID growth rate in Q4. The last group was hit hard the most, which includes travel, entertainment, fuel, and restaurants. While most of these markets are still negative, restaurants are almost back to 2019 levels in Q4. Lastly, the management provided fiscal year 2021 guidance. Revenue will start soft, but will end strong in second half. Value-added services will continue with strong growth, and most of the free cash flow will be paid out to shareholders via share repurchase and dividends. During the Q&A session, one analyst asked about the outlook of the value-added service. 2/3 of the value-added services are platform type of services that are driven by transactions, which has been going pretty well this year. The other one-third includes card benefits, marketing services, data analytics, and consulting. While the travel card benefit is quite sluggish, the data and analytics and consulting are growing at a robust level. One analyst also asked about the strength of debit growth. The management responded that the shift to online shopping and everyday spend categories favor debit quite a bit. In addition, people prefer to spend money they have than using credit during this uncertain period. Hence, debit growth will stay up at a healthy level. Lastly, a couple of analysts asked questions about the strong growth in Europe. First of all, the movement of funds into high-yield savings account drives up the transactions, which is not going to repeat itself. Secondly, deals with fintech companies started generating more revenue. Lastly, value-added services are also growing strong in Europe. In the near term, Visa will be very focused in Europe market and continue to invest heavily to promote the brand. Now let's take a look at Visa's stock performance before and after the earnings call. Visa reported revenue of $5.1 billion, beat analyst expectation of $5 billion, and its adjusted EPS of $1.12 also beat consensus of $1.10. Stock had been trending down prior to the earnings call, but subsequently rebounded on the following day. Lastly, here is the latest summary of analyst ratings of the company. Currently, there are 39 analysts covering Visa, and more than half of the analysts gave the rating of buy, although we see in December several analysts upgraded their ratings to strong buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.